Hello guys, Alice here. Welcome back. It's been like 12 days since my last video published on the YouTube, and I finally got some time to make more content, share information, insight with you, and help you a lot in your trading journey. And I'm really happy and excited to get back on these videos. For this particular episode, I've decided to make a video of the trades I've taken on the gold on 12th of February and explain to you why and how I have taken those trades. So it ultimately helps you a lot in your decision making process. I know you can't wait to see this trade taking and the reason behind them, so let's dive in. Okay guys, let's begin. This is the 5-minute chart of the GC that you are witnessing. If you've been following me, you know that I'm trading 5-minute exclusively. It works for me, it suits for me. If you are not comfortable with it, you can change it to like 1 minute or a second chart or a range chart, whatever really suits you, you can do that. 5-minute works phenomenally. Now let's see. I'm gonna zoom out first. This is the volume profile of the today. Basically at the beginning of the day it was not like this, it developed into this. I'm gonna look into the Friday's volume profile. Okay, this is the last Friday. High of the value area, low of the value area is here. It is shown, this dashed line. Now market opened up here, right? And it did not manage to get out of the range of the value area high and low. It stayed inside the confine of the value area, okay, until the New York session. In New York session, market managed to break below the value area and it sold off all the way from like 2042 to 2025. Okay, it was a huge movement to the downside and it happened in New York session. I took this trade along with a long trade afterwards. I'm going to show you how. So what is this? This is the WVAP line that belongs to the last Friday. I extended it to the right and now it is acting as a resistance level for me. I waited for the price to get close to this level. So on first attempt the market got close to this level and it dropped all the way down. I did not take this trade because I was not behind the chart in the screen. So I was waiting for the New York session to open up and this was a trade which I took. Let's take a look at it. What's going on here, guys? Okay, the market was not moving that much. You see the volume is not that high. 200, 163, 232, 100, I get 216. The volume is not that much, right? But from here the volume starts to rise. We are moving into the New York session already and there's some decent volume coming into the market. 480, like a 1000 contract, 2200, 1600. Okay, the market was moving up aggressively. People were aggressively lifting the offer, right? So let's take a look at it here, guys. I'm gonna zoom in here. So let's take a look at this candle. Volume is 2200, delta is 267. So everything is good about this candle. Okay, we expect the market to move up, especially when you look at the footprint here. You see that the POC is at the bottom of the candle, okay, and the candle closes all the way up the edge. It's a great sign that the market is going to continue, okay, for another candle to the upside at least. We have that intuition. We see some imbalances, but they're not stacked up, but still there's some imbalances exist here and it's good. Okay, this movement is solid and good. But let's take a look at this candle here, guys. The volume on this particular one is 1600, right? 1600 volume on this particular candle. Delta is 292. Okay, and there's something. Previous candle the volume was 2200, now it is 1600. There is a reduction of the volume, right? The volume is not that high, right? The volume has been reduced, okay, from 2200 to 1600. And take a look at this one. Stacked imbalances. at the top of the candle, and yet the candle does not go beyond those stacked imbalances. When I want to see stacked imbalances, something like this must happen. Take a look at this one. I have two stacked imbalances, right? And what happens after the market goes all the way up? So this is a legit stacked imbalance. But in this particular instance, stacked imbalance happened at the top of the candle, at the edge of the candle, and the candle does not go beyond it. Take a look at this one. 4, 3, 5, 2 contracts only got traded on the bid side. What does this mean? So when the market is going up, you see the aggressive buying, right? The people are aggressively lifting the offer. But you have to see something else. You need to see the bids. Okay, the bid needs to be higher. Why is that the case? The bid needs to be high as well, because they show that the movement to the upside, it is being supported by the demand. Basically, this is the buy limit orders. We have the buy limit orders here, right? If we are not seeing too much, like 4 contracts, 3 contracts, 5 contracts, 2 contracts, so it means that there are not much buy limit orders at those levels. We don't have much buy limit orders. So those passive buyers are the ones that basically supporting the movement to the upside. So aggressive buyers are pushing higher. Next candle almost touches the WVAP line, okay? Gets pretty much close to it. What happens? Candle closes bearish all the way down. It goes all the way down to the WVAP line, today's WVAP line, and does not make below the WVAP line, right? Take a look at the volume. You have like 2,500 volume being traded, and delta is positive. Tell me this: if the delta is positive, means that there was too much aggressive buying in the market, and why the footprint did not close bullish? It is a bearish footprint. There's too much supply going on in the market, which the current demand is not sufficient. Okay, that's the whole logic behind it. So I waited. Next candle opened up, right, guys? Next candle opened up. It moved back up. I went short at the edge of this candle. I put the stop loss above this blue line, and you can see after a while the market sold off. Boom. It went all the way down to this point. So this was my trade. I took it and it was really decent and profitable. Now you see the profit on your screen. So this was the first trade which I took, and I also shared this trade before it actually opened up with the community. They managed to take the same profit as me. Okay, so that was the first trade which I took. The second one was here. So the market sold all the way down to this point, right? Market reached this low. Take a look at it. Delta is now positive, yet the candle is bearish. This is a discrepancy. Normally what you want to see once the market is going down, you want to see a bearish delta, right? Like this one, like that one, okay? It could have other meaning here. Those people who went short at the top here are exiting their trades here, guys. Remember that. Someone goes short here, it's gonna actually close the trade, right? At some point, probably here or here, right? Some people get out here, some people get out here, okay? And this is the clear representation to me that some people can save their profits and exit the trade around here, because 207, the market is not moving up. Delta is positive, but the market is not moving up, okay? So the next candle went down, moved down, and delta is in the negative 25. I'm not seeing much volume being traded here. Only 6 contracts got traded at the low of the candle. There is not much interest here at the lower edge of the candle. Yet next candle close goes up bullish, fantastic. Okay, I'm not trading it. I waited and waited because the movement to the downside was so aggressive. This was a short-term pullback. I knew it that the market is going to give me a second chance before actually skyrocketing, okay, rising all the way up. And here is the trade which I took, guys. Take a look at it. Delta 33, 59, 214. 178. Okay, the candles are bearish, the footprint is bearish, and the delta is positive. There's a discrepancy here, guys. There's a discrepancy here. Something wrong. In a normal case, when the candle goes down, delta is going to be negative, right? But in this particular instance, this is not the case. Okay? And I'm going to zoom out to show you something else. Look at it. What do we have here? The market is making a new low while the cumulative delta is making a higher low, right? This is a divergence. Cumulative delta is making a higher low, the price is making a lower low, and ultimately the market goes high. So I knew at this point, okay, good things are gonna happen. Divergence, it was the first sign. Seeing these positive deltas, like it's not just one candle, guys. 4 candles in a row, it's positive. And take a look at this one. It is a bearish footprint, right? But you only get 5 contracts traded at the low. Candle closes above the POC. 144 contract got traded on the bid side, and yet the market did not move down. I went long. At the opening of this candle, I went long. I put the stop a couple ticks below the low of this candle, and you can see what happened here. The market moved all the way up here, guys. And this is the profit you see on the screen, guys. I went in with a half a lot, and I shared the trade with my community, and they took it and made the same profit. So let me dive a little bit more into this one. Okay, candle opened up, moved all the way up there. Okay, only 2 contract got traded at the top. There's something wrong here. So the market, you see, pulls back down. There's a stacked imbalance, and also the POC acts as a great support level. It's not letting the price to go down. Okay, next candle, POC at the here, the candle closes. It's not that bear bullish footprint, but it's still okay, something we can work with this one. Delta is 155. It is good. The volume has come down, but it's not that much, 685 volume. Okay, 145 delta. It is good. Next candle, the market drives down, but delta is still positive. Okay, next candle, 112. Delta is positive. 150 delta is positive. So I kept this trade open, and you see it moved all the way up here. Okay guys, these are the results of the trades I've taken today, and I've only acted upon the information provided by the footprint chart and the things I've taught you in the previous videos. So if you haven't seen them, make sure you go and watch them. It helps you a lot and allows you to take the same trades and make the profit the way I do. And also my people and students in the community do. They are making the same profits as the way I do. They take the same trades because they see the market. They have learned everything I've taught them, and they're using it in a correct way. So make sure you watch these videos, okay, as much as you feel necessary to understand the concept and implement them. Okay, I'm gonna make more videos of this kind, explaining my entries, exit, why I take the trades, and how I take them. So it helps you a lot in your trading journey and makes you become a better trader. Until then, make sure you keep practicing. Thanks for watching, guys. Stay tuned for more videos. Bye.